Hello people of YouTube and welcome back to another financial stock market vlog from the Wolf of Dubai today, from France, Bordeaux, and we are talking about today the beer and Tesla short seller case, because a couple of vlogs ago I have spoken about the Tesla bull case and put in a lot of bull cases statements out there, but I believe it's super important to know also all the arguments from the short sellers, because even Tesla is one of the most shorted stocks on the market out there, and we are taking the bull and we are changing this to beer today. So make sure you fasten your seat belts and let's go. So make sure you smash also the subscribe button as well as the thumb up button if you like these videos, if you want to have more, because this will help me in the algorithm of YouTube to push this video up to the Tesla lovers and haters. I'm very excited to make this vlog today because it's super important stock for me. As you know, I'm a Tesla shareholder, so looking into the beer cases and statements and points is very important for me as well, because I want to understand why this shorted on the stock market, and maybe I have to adjust, or someone or all Tesla shareholders need to adjust and watch very closely all the arguments to make sure they're on the right track. So let's dive into the first arguments of the short sellers. The very first argument from the short sellers are that they believe that after seeing the latest results, they say that the margins of Tesla fall apart. We had around 20.6 profit margin on the cars, which was really good, and they fall to 18.9% in the last quarter. So there's a lot of short sellers and shorters of the Tesla stock. They say the dream of such a huge margin car seller in the electric market is over, and it's dropping from here, and I totally agree. I mean, you see a huge change in Tesla. They are going from niche electro vehicle manufacturer to a mass market manufacturer, and of course the margin goes down because they just produce much more cars for much less money to purchase, to serve a much more brighter audience. You see the same in Volkswagen. Volkswagen has also massive amounts of cars that they sell for very low margin. Also, Daimler, who is in the niche of premium market cars, they have around a margin of 5%. So Tesla's margin is still more than triple that margin of Daimler. Though Daimler producing much more cars, of course, over the year, and so I think it's a valid comment. It's true, but I believe that this is the way how Tesla can grow further. So let's go to the next one. The next argument is that the Model S and X sales slow down, and that's totally true. I mean, that's, if you look into the numbers, the sales are going lower, decreasing with time. Tesla don't want to update the shape or do a facelift or anything like that dramatically. All the other car manufacturers, they produce one car, and every 3-4 years they update the car to make sure they get new buyers and so on. The buyers who buy new in a couple of years get something new. This is interesting for a sales perspective, and I believe there's Tesla that don't make this update, which I believe, I don't know if this is the right way. Rather, they're taking the approach of changing the car on continuous basis. So you have this lot of improvements over the last couple of months, and you maybe don't even recognize there was a facelift slide without any big announcement during the last couple of years, where they changed the front a bit. So there is improvements and adjustments on the cars, and in the recent conference call, Elon Musk even said that they would love to, produce more Model 3, and they just use S and X to spell the word sexy with S, Model 3, X, and the Model Y, which is, was sarcastic, but of course I believe that if they would, then they could basically cut the S and X completely. But of course there's a huge follower base on these cars as well, and also a lot of customers want to have these cars as well. They're super great cars. The profit margin on that are also relatively much better than on the Model 3, but on the long term they will focus on the Model 3. Also, if you see, the Gigafactory in China will only produce Model 3 cars, so the focus is really on the mass market, and I think that's the way to go. Let's go to the next one. CTO and co-founder GB Straubel is leaving the company, and I think it's definitely a hit for Tesla, with no doubt. I don't want to put my pink Tesla glasses on and say I'm in love with the stock whatever comes. You have to watch very closely the news, and I believe that the leave of JB Straubel is not good for Tesla, because co-founders have this specific passion and a specific thinking that others might not can have for the company. Though I believe and I know for a fact that this is prepared over a couple of years or months. The guy at the right hand below GB Straubel, he will take over the CTO tasks and opportunities, and GB Straubel will still leave as an advisor to Tesla, which is standard. Same happened to the last CFO who left for retirement, which was also long planned ahead, and also he stayed as an advisor for sure at any point of time for Tesla. The next argument for the short sellers is that since Tesla did the very record quarter in sales and delivery, they still could not achieve profitability, and that's, I believe, one of the Tesla main problems, that they cannot operate now at this point profitable. But as seeing it as a growth investor and value investor, I believe there's still value in the company and there's huge growth. So I give them a pass over the next couple of quarters. I believe that hopefully by end of the year they can close this year as profit. And they also said that on the next couple of quarters they can be break even. I think next quarter maybe will already be break even, and the quarter after that will be profitable. So we will see, because sometimes the statements of Tesla seems to be a little bit time off from the timeline that they propose. So let's see about that, but I'm thinking that in 2020 they definitely should be a profitable company, and since then I think there's huge potential for the stock as well to go up astronomical with the Gigafactory and all the other things that are uplining there, because the revenue will just be very good, and they are trying to reduce the capex as well. They just reduced it about 60% from what they envisioned for this year. So let's see if they can hold that. I'm staying positive there. So let's jump into the next point. So looking into the stock just year to date, you will see that the stock is down minus 25%. It was much more this year already, but the stock had over the last weeks a good rebound from around 175. So that's good for the stock. But however, you see that there's a huge quarter of loss of the value of the company in this year, and this is of course the argument for the short seller to say, no, we are right, we are on the right side of the boat. The boat is sinking, and we are making huge profits. But don't forget that short sellers have a lot of costs holding the shorts, because they pay kind of interest on their shorts, so they have to their thesis have to move fast, otherwise over a long period of time, like 5 or 10 years, they can lose a lot of money just if the stock stays in one position, because they are borrowing the stock and they pay rent basically for the stock. So it's important for them to move fast on the result of the short sellers, so they can cash out and make a profit out of there. So let's see how the stock develop on the rest of the year, because you have seen that the downturn was around 175 or $178 per stock, and since then it went up, even though there was a dip in the Q2 or after the Q2 numbers, though the stock regenerated some gains afterwards and is on the way back up. The next point is, of course, upcoming e-cars competition. There's a lot of manufacturers that jumping the train into the industry and releasing model after model. Still, the overall vehicle market is very, very, very young, so you see that a lot of manufacturers trying new things, releasing some models that are not really well, then it not really works in their existing manufacturer and dealership model, because on a traditional manufacturer model is that they manufacture the car and they give it or sell it to the dealers. This dealers sell it to the consumers, and the dealer also have some profits on the service and maintenance. But though e-vehicles don't have that much service, the dealers are a little bit concerned that they will lose a lot of their income, that they cannot service e-vehicles, because e-vehicles don't need that much change of brakes, because there's this brake adaptation that while the car is on, let's say, not on a gear and rolls, it's charging the battery, so it's like a natural brake of the car. So the brakes are actually not so much in use than normal cars. Plus, you don't have any oil change. You have lots and lots of less moving parts that can damage. So you need a really less service for this kind of cars, and that's why dealers are a little bit afraid if they will lose a portion of the revenue, and try to avoid. And I heard this from different manufacturers that they try to avoid to sell the e-vehicles rather than the usual ICE internal combustion engine cars. Solar business for Tesla is down -65%. This is definitely a big hit, and I have no bull argument for that, rather than they are trying to focus as much as possible on the automotive, because this is what's keeping the company afloat. So the strategy is just, I believe, in the solar business of Tesla to create this solar roof to make sure that they can sell this as an refit for normal roofs, and this could be a good selling product. However, the solar business of Tesla is not something that can benefit at this point to the company. So point taken absolutely for the short sellers that Tesla is not a good solar company yet. And now we come to I believe the most important point for the shareholders of Tesla, as well as the short sellers of Tesla. They say Tesla has one of the most critical balance sheet that is out there for any company, and I totally agree, because there is one number that is very, very scary for Tesla. All the total, they have $32.8 billion of debt. And if you just put this into the consideration and to perspective, this is like 3/4 of the market cap of Tesla. So this would mean that if Apple would have 750 billion of debt. You know, as you might follow them, I think they have something around 30, so not even 3% of the company is in debt, and they have so much cash that they can pay it out anytime. So you see how important it is for Tesla to get to profitable, you know. Though $32.8 billion dollars is a lot of long-term debt, short-term debt, they are cash flow positive, which is important, because if you look into similar cases in the history of the stock market, you know, Amazon, for years they didn't make any profit and made loss, but they was always cash positive, had a lot of liabilities, but stayed cash flow positive until one day they turned. After their growth enough, you know, they're still growing, they're still investing, they still have quarters where they don't make money. So if you want to grow, then definitely this is the way to go. But I believe it's a good way for Tesla to get profitable, you know, to build down the debt of the company just a little bit while still growing. And like, still growing should be the number one priority for Tesla. And the last point for Tesla short sellers is definitely that they missed the revenue this quarter. This is true. The people have estimated a lot more revenue, but I believe one of the points that they miss revenue is that they created actually the option of leasing the cars where they don't get the full amount, but over the years they will get the full amount, and they want to keep the cars into the assets of the company, so the assets of the company will grow with time, which I will believe it's a good thing, and they will use this cars that they will take from the leasing back to the robo taxi network, so they will have millions of cars on the road that making money. So very interesting vision. If this will be a reality, we shall see. So let me know in the comments what you think. Are you a Tesla bear or are you a Tesla bull? Thank you for watching. Peace, and don't forget, the grass is greener on the other side.